Hi everyone, welcome to another video by Optionables. My name is Saket and in this video we are going to review the trades taken on 21st of October 2021. As usual, even today was a very volatile expiry, so we are witnessing this from almost 3 expiries, and BankNifty consolidated till almost 215, 230, so it just traded in the range of 200 points. And after that we saw a huge up move or huge buying coming in BankNifty, and BankNifty rallied almost close to 400 to 500 points higher. So BankNifty also closed above 40,000, which actually acted as a very strong resistance. So one more learning what we can take away from this is you should always remember in technical analysis, whenever a strong resistance is broken and Nifty or BankNifty stays above that, so that will act as the next support. So this is one lesson what we can learn from technical analysis. Similar thing we witnessed in BankNifty couple of days back when BankNifty broke 38,000. So that was a very strong resistance. So right now it will act as a pretty strong support. And now we saw a huge breakout coming in Kotak Bank where it rallied close to 7%, and that was a very strong breakout and also an all-time high breakout. So BankNifty right now is looking extremely strong. So coming to the trade what we took today. Today we made a total profit of close to 2 lakh, and I will be discussing what exactly were the trades and how did we end up making this profit. And apart from that, in the community trade section where we were learning together on virtual trade, so there also we ended both the trades with profit. So we had taken 2 trades, one in Nifty as well as one in BankNifty. BankNifty we had taken a bear call spread. So even these 2 trades were booked in profit, and we ended with a profit of 20,000 from these 2 trades alone. And we have one more trade which is running, that is the next week trades, and we have done one adjustment to that. We'll be discussing more about these, what was the adjustment, what was the logic, and we also will be discussing why did we exit our bear call spread around 1 o'clock itself and what was the logic. So all this will be discussed, and I also hope that you all made profit in your virtual trade and you had a great time learning how exactly you can adjust. So if you know that the short straddle which we had done went completely wrong, so it was, the ending was nowhere close to where we would actually have made some profit, but we adjusted this position well and we could actually bring this loss making position into a profitable one. So next week we will again continue with the existing trade of BankNifty and see exactly how we can take it forward. So our broker Firstock is providing for our clients first 100 orders free. That means if you are opening an account newly, then you will be provided with first 100 orders free. So if you are interested, then you can definitely check out the link in the description and you can open an account with Firstock. So with that, we'll be quickly now moving on to the video, and if you are liking the content of this channel, then please do hit the like button, share as well as subscribe. Thank you so much for joining guys, and see you in the next video. Hi guys, welcome to another video by Optionables. Today, like the other expiries, the market was extremely volatile, and yet we were able to end with a profit of close to 1.83 lakhs. And not just that, even the positional trade went pretty well. So as per plan, we sticked on to the rules. We had already discussed what is the course of action if a particular thing occurs. And first we'll be discussing the community trade part, and later we'll be moving on to the actual intraday trades which we took. So here I'll be explaining the logic behind each trade as well as why we exited the bear call spread early as well, right? So to initially start off with, let's look at the trades what we have. So here I have opened in Opstra. So totally we had taken 3 trades, and one was the BankNifty bear call spread, one more was Nifty short straddle, and next was BankNifty short straddle for next week. Right now, we'll discuss about these 2 trades, which was current expiry trades, and later on, I'll also discuss about the adjustment made to the next week expiry trade, right? So coming to this trade, the bear call spread. So totally, we realized a profit of close to 19,000 rupees on 25 lots. So on the community tab, 2 days ago, we created a bear call spread where we had recommended 1 lakh per lot. So we recommended to try this out on virtual trade, and we had actually taken 25 lots because we were using 25 lakh capital. And the thing is, we actually exited this trade around 1 o'clock, and we also posted that as well on the community tab, saying that exiting BankNifty 40,000 bear call spread with a profit of 900 per lot. So even this was posted around 1 o'clock. So now first we are going to understand what was the logic behind exiting this trade and booking the profits. So what did we actually think before doing that? So what we have to understand here is the maximum profit what we could get from this particular bear call spread was 21k. And we had already realized close to 19,000 rupees. So totally there is 21k, 2 more k to go. I have realized almost close to 90% of the amount that I can totally get. So I have only 2 more k left. So what is the risk I am taking to get this 2 more k? So I understand that at 40,000 there was a huge amount of call option contract and all those. But what I thought was, you can see that when I actually open Nifty, so there was a huge sell-off in Nifty. So even when this kind of sell-off was happening in Nifty, and Nifty was almost down by close to 400 points from the morning top. So in spite of that, BankNifty was showing a lot of resilience. So BankNifty was not coming down even though Nifty was crashing like anything. So I thought at 18k, there will be a psychological support and people won't let Nifty break 18k so easily. So I thought that from this particular point, what if Nifty actually starts moving up and there is a short covering in Nifty? So BankNifty is already showing a lot of strength and lot of resilience. So this would technically mean the BankNifty would be pushed further upside with a huge momentum if Nifty actually ends up going up. So this was the idea what we had. One, we saw that BankNifty was showing a lot of resilience and any short covering would push it higher. Two, we had realized 90% of the total premium what we could get, and there was no point in holding this any longer. Based on these two ideas, we decided to exit this well before we could actually realize the whole premium, and it was a great call because if we actually held it till end of the day, we would have only realized close to 6,000 rupees. Whereas since we exited, we could actually realize close to 18,000 or 19,000 rupees by exiting this early. So that was the logic behind the first trade, where we actually ended up making close to 0.7% of our total capital. Now we have the next trade, which is the Nifty trade. So Nifty trade, so it went completely wrong. So nothing was in our favor. We initially started with the short straddle at 18,500. So look, where is 18,500? It's right on top over here. And we have come close to 400 points down from the short straddle we did. And there is absolutely no way Nifty will be covering so much. So the short straddle will be covering such a wide range, right? So in spite of that, we didn't go to a loss. When it went completely against us, we had a clear plan of action. So what exactly should we be doing? So yesterday itself, we had created a position wherein in the worst case scenario, our risk would be somewhere close to 1.5%. So this would be a worst case risk. Then we had also discussed two important things in Nifty. So the first thing, as you know that we had taken such a position that if the market stayed below 18,300, we would actually break even in this trade. So this is the simple idea of trading, guys. End of the day, you don't have to make profit from each and every trade. So just try to reduce your loss in the trades you make a loss. And in the trades you make a profit, you will anyways end up making a profit. So there is nothing about it. So it's pretty simple. All you have to focus is when you're wrong, just try to reduce your loss. And when you're right, you will anyways end up getting your profits. And as discussed, the plan was pretty clear. If Nifty actually stayed above 18,300 for a long time, then we are going to short 18,250 puts. If not, we are going to do nothing. So we are just going to hold on to the position. And luckily for us, Nifty actually didn't hold on to 18,300. So Nifty actually fell below 18,300, cracked much below, and also went up till 18,050. So this was a huge fall in Nifty, and it absolutely required no sort of adjustments to be done. And even in the worst case, we would have only lost 1.5% without doing any adjustment. So this is why having right position size and proper risk management is very important. So when you have proper position size and risk under control, so even whether it's being positional trades or intraday trades, it is not going to matter. So whether there's a huge gap up or gap down, it is not going to bother you, right? So this was the second trade. And the plan of action was quite clear. And here as well, I had mentioned one more thing, that as of now, we are not doing any adjustment. We are also considering to increase the returns by shorting additional call options at higher levels. So we in fact did that by shorting additional 18,200 as well as 250 call options, but we didn't recommend it for the community trade on the virtual trade because so it was not required. So we are just trying to show you how you can adjust your position and come out of a loss. So that's the reason we never really recommended shorting further call options. So now we discussed two trades in the community trade. And both the trades went really well. Even though one trade was completely against us, we were able to manage and come to profits. So now we have one more new short straddle running in BankNifty, and this is next week short straddle, right? So this position is right now in a loss, but trust me, this is very simple to manage and absolutely nothing to worry. So as long as we don't see a huge V shape, tomorrow big gap down and day after tomorrow huge gap up, so there is absolutely nothing to worry, and it's a pretty simple position to manage. So let's just discuss and see what exactly are we going to do. So first, as of now, I will just show you what exactly we did. So this update, I actually didn't give it on the community tab on YouTube. Rather, I gave it in the Telegram channel. If you are not part of Telegram channel, then do click on the link below and join the Telegram channel. So this was the ideal position what we had, and our break even was coming at 40,169. So we had more or less reached our break even. And downside, I was not really worried about 38,831. So because there is lower end support coming in for BankNifty. So a very simple adjustment, and we are pretty low on lots also. So the total margin required is just 5 lakh out of the total 25 lakh what we are having. So this week, we will just focus on managing this trade and try to achieve around 0.75 to 1%. So this particular week, we already made around 20K with both the trades out of 25K, which is almost close to 0.8% of the total capital. So that is a pretty good amount to achieve, 0.8%. So this week we will only focus on this particular trade alone. So we are not going to take any trade for this particular expiry, and we will try to achieve close to 1%. Maybe we can increase this slightly to 10 lots instead of 7, right? So the idea is fairly simple. I am not looking at such a low break even. So I am okay even if I don't have such a low break even, because the momentum is very positive. Kotak is at all-time high. So I don't mind shifting my lower end higher. So, but I am really concerned about this, and I really don't want to have a loss on the upside. And you can simply solve this problem by just shorting an additional put option. So that's what we did. So we just ended up shorting 40,000 put option at a rate of close to 339 rupees. 336 rupees. So not 339. So I'll just change this to 336 rupees. And this is how we got our new payoff. So once we did that, okay, this is not one lot, but this is 7 lots. So once we actually did that, you see that we have no more loss on the upside. So here you can see 40 lots. I have gone short on 40 lots. But the thing is, for the community trade purpose, we are only using 7 lots. So remaining 33 lots is for the additional capital which we are having. So the idea now fairly remains simple. On the upside, we are not having any loss no matter where the bank nifty goes. So our break even is now coming in at 39,258. So I am quite comfortable holding on to this trade. So tomorrow we'll just buy a hedge around 39,000 or 38,500 and we should be good to go. So we'll just end up adding this particular hedge, and this should be more or less providing us enough room for us to manage our positions. I know the worst case loss is somewhere close to 2.5 lakh, which is 10% of the capital. But trust me, we are not going to hold it on till then. So we are just going to risk around 2 to 3% of the capital. Even if there's a huge gap down and bank nifty falls quite a lot, so we would have lost 10%, but I'm pretty sure that we'll recover that and maybe try to end it at 2 to 3%. So this, I should have done it today itself. So I did make a mistake by not buying this hedge. So this is something which we had to do today itself, buying this particular hedge option. So tomorrow morning, so since I had additional margin, I actually didn't realize that this was required for lower capital. I just ended up shorting it, but it is required, and that's the reason we'll be doing this tomorrow morning as soon as the market opens. So that is the plan right now, and so we are in a pretty good position and nothing to worry about this trade. So let's see how it goes. In the worst case, we'll try to come out of this position at a loss of 2 to 3% max. So in case if the loss exceeds 2 to 3%, we'll be cutting off our positions. So that is for the trade as of now. So we have discussed about all the three trades in the community section, and coming to today's trade, where I'll be quickly wrapping up, and how exactly did we end with a profit of close to 1.8 lakh. So that is fairly simple. All we had to do is keep a close hedge. So that's what we had missed some weeks back. So we had done a 39,600 short straddle, 39,500 short straddle, and 39,700 short straddle. So we had 3 short straddles. But the thing is, when Nifty actually starts going up along with Bank Nifty, so all these 3 short straddles went to a loss. But I had a hedge at 39,800, fairly close hedge, and I had purchased additional quantity. And on the downside, I had it at 39,400. So these two were the hedge legs, and these three were the shorted legs. So I had created short straddle, which means I had both shorted C as well as PE at 39,700, 600 as well as 500. So from morning till 2 o'clock, Bank Nifty consolidated in a range, right? So after that, we saw a huge breakout coming around 2:30. So let me just clear the board right now. And here we had a very close hedge leg. And in the worst case, so while the market was consolidating, we had already realized a profit of close to 2.7 lakh. So this was the profit what we were having, 2.7 lakh, because the market was consolidating throughout the day and there was absolutely no move on any side, right? After that, what really happened was Bank Nifty started to shoot up, but in the worst case, we had a loss of close to 5 lakh. So that means what would have happened? So from 2.7 lakh positive, negative 5 lakh meant that I would only lose 2.5 lakh. Even in the worst of the worst case scenario, I absolutely had to do nothing. So I would just lose 2.5 lakh, which is not even 0.7% of the capital. So I had to absolutely do nothing. So as the market started to shoot up and we saw a huge up move, so I started shifting my put options from 39,500 to 39,700. Then later I shifted it to 39,800. This way I started to collect additional premiums, and finally we ended with a loss of somewhere close to 1 lakh. So that's the reason we fell all the way from 2.7 lakh to 1.8 lakh. So we just lost around 1 lakh in this huge move. So if we had some extra hedge, we would have definitely benefited. But that is absolutely fine. You can't do anything about it now. So this was the whole trade and how we managed it. So it was pretty easy because 1, we had very close hedge, and 2, we had pretty low quantity, so we didn't actually have to worry about anything much because we knew our max loss was 2.5 lakh. It is completely hedged and there is nothing to worry. The position size was also low, and this gave us enough time to think, analyze the situation, and slowly make the shift on the put side, where we collected additional premiums and we were able to cut the entire position at a loss of 1 lakh only. So instead of loss of 5 lakh, we could cut it at a loss of 1 lakh. So with that, we closed the trade and we pretty much ended with the overall profit of 1.8 lakh. So we discussed most likely everything that we had to cover. That is the community trade regarding this week expiry, community trade regarding the next week expiry, and how we actually manage today's trade. With that, we also come to the end of this video. So this is relatively a long video, but I hope that you guys have enjoyed it and you got to learn something from this. If yes, then please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.